Good afternoon, everybody. Myself, Dharmesh Shah from ICICI Securities. We have came out with a report on the market based on the technicals where all weather stocks performance across the bull market. As we all are aware that the investing in the current market scenario is very tough, especially at the time when most of the companies are trading at the multi-year low and every stocks looks cheap. Investors with better off with those companies which have emerged winners in the previous down cycle as well. The term weather all weather stocks is used to differentiate such companies that have weathered multiple economics and business cycles and delivered returns for investors across a long span. We believe in the current uncertain scenario when market have implicitly thrown up once in a decade opportunity to construct the long-term portfolio. Investor should look at the consistent performer going by the historical evidence. There are such around 94 companies in India which we have already given in a report that have helped investors to build wealth across the past 3 decades. Now we arrived at a thesis based on the triangular approach. Once once in a decade investment opportunity. Over the past 3 decades, if we have noticed, there have been three major instances of corrections of more than 40% on the index level. At March 2020 low, the Nifty has already seen a correction of around 40% from the lifetime high. Although the short-term volatility and uncertainty is a norm after such a corrections, what transfers in following years is a multifold bull phases. Bottom formed after such corrections have never been challenged, have never been challenged again historically. Thus, from a technical analyst perspective, the current correction provides the required setup for construction long-term portfolio. Second, avoiding the value trap. One of the challenge in the investment process is overcoming the recency bias. Investor tends to buy the multi-bagger of most of the recent bull phases as they correct. However, history warns us to avoid such value traps as they have proved determinal to portfolio health historically. Below are there are many examples to prove for that, where outperformance of the pre-bull phases have remained laggards for the next several years and therefore prove determinal to the portfolio health. Hence, it is prudent to look at the performance of the multiple bull markets rather than looking at the most recent data. Stick to the consistent performance is the last mantra of this thesis. We have mined the data through four major bull phases from 1988 to 92, 1998 to 2000, 2003 to 2007, 2009 to 2017 to identify the businesses which have consistently delivered return for the investor in each of the bull phases. These are the companies with long-term history, proven track record, and weathered through different business cycles and market cycles, which empirical evidence suggests that investing in these companies would be reward for the investor from the long-term perspective. We came out with our top picks of all of 94 companies where we have picked five stocks as a top pick. Ambuja Cement, we had a target of 208 with an upside of 19%. Pfizer, we had a target of 53.90 with upside of 25%. Escorts, we have a buy in the range of 720 to 780 with a target of 910 with upside of 21%. Blue Dart again a range buy in the range of 1950 to 2150 with a target price of 2630, upside 23%. And last but not the least, Tamil Nadu Newsprint, we had a buy with a target price of 125 with upside of 25% from the current market price. We believe, I think so, the market in the near term is more likely to see a consolidation in the range of 7500 to 10,000. Upside seems to be capped at around 10,000, being a 50% retracement of a level from 12,400 to 7,500. The 50% retracement is placed at around 9970. So 10,000 as a psychological level remains to be the very strong resistance. However, on the downside, we feel 8,500 will be the first major support, and 7,500 will be the support which we expect to hold in the near term.